Joel, good morning. Listen, I know WeWork's not public, so you're not trading it per se, but you're a smart guy. You're in technology. You follow the story. What do you make about this? I mean, should Newman be, goodbye, Newman?
Yeah, I mean, what you guys just discussed sounds like a script for a great Netflix series. It really is just one of the spectacular implosions we've seen in the last 10 years, even before, really ignited by the release of the prospectus not that long ago. I mean, the cracks in Mossy's Son and the Vision Fund, in my opinion, really started to appear last spring. I know CNBC was covering it, but there was kind of chatter that Mossy's Son was floating the idea of IPOing the original Vision Fund, let the retail get a chance to invest in his genius. And it's just unraveling in a spectacular fashion. He invested 9 separate times in WeWork. A total of $12 billion of his money has been pumped in. And it's literally just, there's been no better way to light money on fire over the past 2 years when it comes to investing. And, he's been water canning money across Silicon Valley. He threw $100 million at Newman's wife's company, WeGrow. He's been in Uber, obviously, and other ride-sharing and food delivery competitors around the world as well. So to me, it's more of an issue about Mossy's Son. He's trying to save his reputation for hopefully launching Vision Fund 2. We'll see how that works out. When it comes down to WeWork, this isn't a tech company in any shape or form, and I think it's pretty obvious if anyone who's read just a little bit about what's transpired here, this is just a complete fraud.
There's been a lot of discussion about
yeah.
what is the strategy of the Softbank Vision Fund, and I think a lot of people have scratched their heads now over the past several years as they've been pumping in, $70, $80 billion now of the original $100 billion into all these different companies out there. And originally, it was sort of a nebulous, we're trying to invest in platforms that we think will be the dominant platforms in decades and years to come, but they're investing in a dog walking company, and they're called WAG, and they're investing in WeWork and Uber and Slack, and I think it's a bit confusing. And then when some of these companies start to go public, like Slack and Uber, and they don't do very well, then investors, I think, take a pause. And a lot of this money is coming, of course, from sovereign wealth funds that are now pulling back for Vision Fund 2 if it, in fact, gets off the ground.
Softbank has seemed to have unlimited money forever. Sometimes, they've got Mossy's Son's investments, Vision Fund investments. It's like they're trading amongst back and forth between themselves. I mean, there's a lot of questions there. I want to move on, and Alex, stick around for this because I'm sure you have a point of view on this. I want to go to another story, guys, this morning, which is Disney CEO Bob Iger got a little bit real in an interview with the New York Times. He said he considered buying Twitter a few years ago, but called it off because the platform was simply too problematic. Iger said that Twitter is a compelling way to reach customers, but in the end, quote, the troubles were greater than I wanted to take on, greater than I thought was responsible for us to take on. There were Disney brand issues, the whole impact of technology on society. The nastiness is extraordinary. I mean, I think Bob Iger, Alex, is sort of reflecting what a lot of us thought. Twitter is an amazing platform, especially if you're in our industry, but there's a lot of bad stuff on it.
Yeah, I actually broke this story.
Disney's all about, like, nice.
Totally. I broke the story in 2016 that Disney was interested and had, in fact, hired a financial advisor to take a look at Twitter.
I didn't just roll you into the conversation by accident,
correct.
Alex.
So the issue there, which we then, I think, later subsequently broke, that there was some brand issues that were going on. The question at the time, I think, was, if you remember, Twitter sort of put itself up for sale. Salesforce was looking at it. Disney jumped into the mix. It wasn't a clean fit with anyone. Now, Disney, in the end, said it was the trolls and sort of the ugliness of Twitter that got in the way, and that very well may be the case about why it didn't work there. But again, I mean, if you think about the Disney buying IP, Twitter doesn't quite fit into that nicely. So even in the end, I think it would have been a reach for any of these companies to buy it. Would they have continued to do what Twitter does now? Would they have taken it into a different direction, maybe used it more as sort of a catch-all video platform? I don't know, but I think it makes sense, actually, in hindsight, for Twitter to stay independent. It was not doing very well at the time financially. It's actually since done quite a bit better in recent years, so maybe it was for the best.
Joel,
didn't buy
Joel, what does this maybe tell you about the future or lack of for Twitter?
No, I mean, I think, like you said, 2 years ago, Twitter story was a lot different. Stock was trading in the teens. It's nearly risen 200, 300% since those times. I think Twitter's a great platform, and I think Jack Dorsey, at least versus Mark Zuckerberg, has done a great job in at least attempting to try to clean up the toxicity of the Twitter platform. He's been very vocal in trying to clean up the platform for well over a year now, where Zuckerberg's kind of just been dragging his feet, to say the least, and trying to clean up the Facebook platform and remove it. But I mean, yeah, anyone who's been on Twitter, Me personally, I just use it casually more for work purposes. It's an extraordinary platform indeed. But when it comes down to like a personal use, it is just pure toxic. I'm hoping, it looks a lot different within 10 years when my kids are a little bit older. And then as far as Disney, yeah, it doesn't fit in with the mouse. It's a complete, 180 from what their brand represents. But yeah, I think what they were potentially looking about, how could they reach, improve their direct-to-consumer offering?
Yeah.
And Twitter's obviously a platform that has that technological capabilities. But at the end of the day, the risk wasn't worth the reward.
Yeah, I mean, listen, Twitter punches above its weight. We're in this industry, so we all use it because that's our kind of our job. I view Twitter literally as part of my job, and if I wasn't doing this job, I'm not sure that I would be on there. But we think about Twitter as all-encompassing. 80% of the country is not on Twitter. Basically, 80% of adults don't even use it or don't have an account. All right, one more story, Joe, if we got you here, because the cover story for this weekend's Barron's was called The Opioid Reckoning, and the magazine discussed how U.S. probes into the opioid crisis and the entire supply chain could spell trouble for investors in companies like Johnson & Johnson, Teva Pharmaceuticals, and even CVS. Concerns also that increased regulatory scrutiny could provide a window for Amazon to further disrupt the sector. So, I mean, it was a very broad-based, very important story. The opioid crisis is one that is major in America. It's affected millions of families. What do you make of the story? Were they stretching a little bit in terms of the reach of the crisis, or did they hit it on the mark?
No, I think they hit the story hit the nail on the head. And you look at the polls coming out of this weekend as well. You have Elizabeth Warren kind of making a push to the top of the most recent polls out of Iowa as well. And I think that would have pharmaceutical investors even more nervous. So right now, it's going to be a tough space to be in. I think the landmark trial kicks off October 21st in Cleveland. And without a doubt, I mean, if anyone's seen, I'm sure many people have seen documentaries about the impact that this has had in America to like I said, millions of families. And, especially from the distributor side, whether it's, a McKesson type of company, they were just shipping hundreds of thousands of these pills, to certain small, backwoods kind of pharmacies. Nothing adds up on so many levels. And you kind of hope that people get kind of taken out and have to kind of face the repercussions, because it's a tragedy to say the least. So I think the Barron story did a great job, covered pretty much, hit the nail on the head as far as who's the impact and why investors should be wary. But again, I think in the coming years, and especially with the election, just over a year out, I think there's better pockets of the market to try to act, to try to generate alpha than in the pharmaceutical sector.
Great discussion. Then we hit the trifecta of top stories. Joe Kulina of Wedbush. Joe, we appreciate it. Alex Sherman breaking stories on WeWork and Twitter. We appreciate it, Alex, as well. Thank you very much.